Welcome to Investor Central's presentation for our 2017 financials and also the launch of our fifth prospectus. Fifth prospectus. Sounds good, doesn't it? It's a pleasure to see everyone here today. Thank you for taking the time to come along to our presentation. I'd also like to thank all our current investors for your ongoing support in helping us make this a great Townsville-based company. My name is Quinn Cowan. I'm the CFO of the group. I've been with the company for just over 5 years. I'm also a fellow director and a preference shareholder. As the CFO of the group, I'm responsible for the company's reporting obligations and accounting responsibilities. I deal with all key staff on a daily basis and keep abreast of the company's performance and progress. I'm happy to announce that at the 30th of June 2017, our loan book was up 49% to 88.9 million. Our net profit after tax was up 39% to 2.67 million. And our doubtful and bad debt expense to revenue was 11.2%, slightly down from June 16 of 11.3%, but within our budgeted range of 9 to 14%. This is a testament to the dedication and hard work of all the staff at Finance One. Thank you very much. As part of Investor Central's obligations as an unlisted public company, we have our books audited every 6 months, also our financials and our business processes. And here today to talk about that process is Darren Tam from Jessop's Accountants and Business Advisors. Darren is the main guy there now. He's taken over from Ian. So congratulations, Darren. He's got 15 years experience in accounting and auditing, commercial and public practice. He's also the treasurer at the Cairns Chamber of Commerce and lectures at JCU, accounting and auditing. So please welcome Darren.
Thank you, Quinn, for that lovely introduction. Good afternoon, ladies and gentlemen. Thank you for inviting me along to this thing. I appreciate Quinn's an accountant and I'm an accountant, so we'll keep it short, sharp and sweet. The main man that you probably want to listen to is Jamie, so I'm just going to talk very quickly about the audit process. As Quinn mentioned, I've recently taken over from Ian Jessop at Jessop's Accountants and Advisors, and I'm in charge of the audit division there. The Jessop's firm has been associated with Investor Central for 5 to 6 years. I think we started back in 2012 is when we started signing off on that, and we've been very glad to be involved with this successful company over that time. As Quinn mentioned, the financial report, it presents a very strong financial position for Investor Central, and it's obviously strong growth occurring at this point in time. But rather than talking about the numbers, I wanted to talk about something that we noticed while we're doing our audit. Jamie's looking at me with a worried look there for a second. We came out on site, we visit a lot of companies. When we visit a company, one of the things that we get to look at is behind the scenes. One of the things we noticed when we walked into Investor Central is the culture amongst the staff. We walked in and there's this strong performance ethos, shall we say, within the team. To give you an indication, we showed up at 8 o'clock, being keen, wanting to get stuck into our audit, because that's what we like to do. And we showed up, looked in, and the entire team were in the office at 8 o'clock in the morning. I'm not sure if they were being paid or if they had just shown up for something, but before work, these guys had all come in to do a training session. And they were all motivated. You could see it on their faces. They were involved. Now, you don't see that very often in companies where people are actually involved and wanting to be part of the business. So I think that just shows how the culture of the organisation is driven by wanting to improve, to be better. You can see that throughout the way they do things. We saw it when we were looking at the financial systems. There is a culture of wanting to always improve. And Jamie's got to take, I guess, some of the credit for that. Looking at the way staff always want to do things better. It's got to be a good way to drive an organisation. So apart from that, we also looked at, I guess, key financial areas. One of the things that we worry about as an auditor is how do they manage risk. It's always going to be front of mind for us, and we also notice that it's front of mind within the company. It is very important that this organisation manages its risk, and you can see that in the way that they operate. For example, we looked at the recoverability of the loan portfolios. That's the main key concern for us. And while we were looking at that, we couldn't identify any weaknesses in their internal control systems because they're on top of it and they manage it fairly well. So, like I said earlier, I was going to be very quick. We're glad to be associated with Investor Central as their auditors, having been doing it for a while. We like to be involved with successful organisations, and we're hoping come Sunday, when the Cowboys go for the grand final, who also happen to be an audit client, that they will also be successful. So go Cowboys.
Thanks, Darren. I'd now like to introduce our Managing Director and Founder of Investor Central, Mr. Jaden McGakey.
Good afternoon, ladies and gentlemen. It's a great pleasure to be with you this afternoon and see so many familiar faces that we've gotten to know over a long period of time. And also I'd like to welcome some new faces that have come to see what our business is about and how we do our things. Darren touched on the culture of our organisation. It gets bandied around quite a lot. I can only claim a very small part of that. We've got a wonderful group of individuals that have invested ourselves into our responsibilities to our investors and our stakeholders. It makes me so proud to be a part of the organisation when they raise the bar. We talked about we get together on a weekly meeting. It is on their time that they come at 8 o'clock in the morning. We're not due to start till 8:30. But they come at 8 o'clock in the morning to learn more about our business and gain an understanding. And we talk about mistakes that may have been made, so we don't replicate those mistakes ongoing. It's humbling, it really is. And I'm grateful to work with such a unique group of individuals. A lot of them are here today. So, ladies and gentlemen, when most people think about investing, traditional methods such as stocks and bonds and property usually come to mind. Traditionally, these have been the main options available to everyday investors. While diversification is possible within these different types of investments, their overall performance is strongly linked to the global economy, meaning that they may tend to rise and fall in tandem. This has led investors searching for other options whose returns are not directly correlated with stocks and bonds in order to enhance their portfolio diversity and protect themselves from traditional market fluctuations. These can be classified as alternative investments. You may have heard of focus investing. If you consider the investments that you've made over your lifetime and the returns in which you received, which ones are the best performers? Are they from a stock, bond, property, or something else? Often for a broad group of investors, it's an investment that has fallen within their circle of competence. Either an industry sector that they have an understanding of or a business that they understand also, to gain a greater return on their money. We at Investor Central aim for our investors to understand our industry sector and feel confident in our business model. Investor Central was established in 2010, and it's an unlisted public company that raises capital for the wholly owned subsidiary of Finance One. Finance One and Investor Central have been operating now for 7 years. However, I personally have been lending and collecting money for over 21 years. In 1997, when I first started lending and collecting money, it was the ideal time to learn that skill set. Unemployment was well over 8%, in some pockets of Australia over 10%. Unemployment recently in Townsville has been reported at over 12%, and yet Finance One continues to grow. Youth unemployment recently was reported at over 20% in our regional centre. Finance One can be selective of which industry sectors it lends to and which areas it wants to grow into as well. We're concentrating our growth at the moment on the southeast corridor of Queensland, along with New South Wales and Victoria. Investor Central is led by a driven team of executives. who have consistently delivered increased profits and strong returns to our investors. All of the directors have their own capital invested through the prospectus. And we're also fortunate to have the staff who value the role that they play in improving the financial well-being of Australians. And it's through this strong commitment that they have developed Investor Central and Finance One into the enterprising companies that they are today. Our company, we understand the responsibility we have to our investors. At Investor Central, we will take a bricks and mortar approach in providing our investors the opportunity to fully understand the business they are investing in. We have a transparent, open book policy to provide our investors with the tools to track and monitor their investment. Unlike other organisations in the investment fund market, we have a strict no fees and charges policy, which means you're actually earning a greater return on your investment. Our investor initiatives include our quarterly detailed management reporting, which is circulated every 3 months. We also do our lunch presentations on a 6-monthly review for our fully audited reports for a half year and full year, with easy access to our board of directors and management team. These key initiatives are essential in providing our investors the advantage of fully understanding where and how their money is being managed. This sees the majority of new investors coming from referrals, with over 90% of our current investors rolling over into additional terms. At Investor Central, as I said before, our aim is for our investors to fully understand the business that they're investing in. Our investors will gain an understanding into our business model, which is quite different to most other investment companies. We work with what we know. Finance One specialises in secured vehicle loans, providing more Australians the opportunity to purchase a motor vehicle. Congratulations to our investors. You've provided us the opportunity to process nearly 60,000 applications for finance, helping nearly 11,000 clients purchase a motor vehicle, ultimately providing freedom through transport and an improved lifestyle. It's changed people's lives. We hear it regularly. And it's been another solid 12 months for our business, with our credit Finance One passing the milestone of having over 7,000 active clients with a current loan. And the loan book today is over $97 million. As demand for our product constantly increases, we've established our business on a national level through our network of over 1,100 finance brokers. In response to market demand, we mentioned this last year, Finance One expanded its existing finance operations into the commercial realm. This allows Finance One to assist small business owners in purchasing vehicles crucial to their business operations. We're excited to announce that these loans are performing to expectations. For some time now, we have been providing finance for businesses to purchase vehicles that is a critical business investment for prosperity. It's most important. The expanded commercial lending has generally provided us with a better client, further diversifying our loan book. Finance One has a dedicated commercial team for this sector, with a background of over 30 years' experience in commercial lending, with credit unions, major financiers, and other major lenders too. They are well equipped to assess loans for these applications. Finance One has broadened also the range of vehicles it finances to include caravans, road registerable motorcycles, commercial vehicles, and mobile plant and equipment across Australia. It's only a small section of our loan book. We raise capital through our prospectus over a rolling 12 months. Investors are issued redeemable preference shares in our company. Computershare is our share registry, issuing the share certificates, but also doing the monthly interest payments back to our investors. This is important, ladies and gentlemen. The way that we've structured the business. Investors rank first. Investor Central has a covenant not to incur any financial debt, whether that's secured or unsecured, while any investor is outstanding. Investors rank before ordinary shareholders in preference to be paid. As a result of this covenant, there can be no priority creditor ahead of an investor, apart from customary trade and statutory creditors. We choose the direct investor model rather than the large financial institutions. This provides us more autonomy and to compete in market segments where others cannot. Steady, profitable growth in our target market has continued to deliver our expanding investor group outstanding returns on their investment. Backed by a diverse loan portfolio, our investors are attracted to our fixed terms ranging from 1 to 5 years, with fixed interest rates of anywhere from 7.2% up to 14.35% per annum. An investment in Investor Central is free from any fees and charges to you. Sounds too good to be true. I certainly hear that from time to time, and I'm sure some of our investors whom have been kind enough to refer other people to us hear that also. But we need to go back to where we first started. 21 years of lending and collecting money resulted us in launching Finance One, and Finance One had a $350,000 loan book when our first investor, whom's here today, invested with us. $100,000 they invested at an interest rate return to them of 18%. From there, our foundation group of investors were formed and we raised capital through an information memorandum. We then went on to become an unlisted public company and raised capital through a prospectus. And as Quinn mentioned before, we're on our 5th prospectus now. But there's 2 main reasons why we offer a higher yielding return to our investors. We wanted to retain 100% ownership of the company, which we've been able to do. So we pay an equity style return through a fixed interest coupon to reward our investors for that. Notwithstanding that, believe it or not, we didn't want to go and borrow money from the larger financiers, because at different times those financiers will pull out of different credit markets, or you go through a GFC and you see a lot of those financiers pull out of the market. We've been able to move past some of our competition because we've had such a diversity of our funding. So thank you. Subsequently, we've delivered 7 years of positive returns back to our investors, now totaling over $29 million in interest payments as at September of this year. We also, this is quite a good point, we also keep 7.5% of funds borrowed from investors set aside in cash. There's over $6 million just set aside in a bank account for capital adequacy or early redemptions. Early redemptions, though, are at the total board's discretion. So we can't have a run on our fund. The board sits down, the integrity of the business and the protection of our overall group of investors is paramount when making those decisions. Finance One's assessment process. Well, it's personalised. When assessing an application, we will take the time to ask more questions than the average lender, so our credit analysts can fully understand that client's personal financial situation. Our finance brokers, they'll supply us with an application form, proof of address and income, a credit file and a proposed vehicle purchase, but also a minimum of 3 months worth of bank statements for a consumer loan and up to 6 months worth of bank statements for a commercial loan. The brokers are only a referrer of a lead to Finance One. We make all the decisioning on whether we will give that person a loan or not. So we look at all of those and we validate each step. So we physically pick up the phone and verify their address along with their employment. And we drill down into those 3 months worth of bank statements, making sure that our clients are creditworthy to get a loan with Finance One and do have capacity to repay us. That's been one of the secrets to our success, is the information that we do get. Finance One. We've developed a comprehensive national finance broking network. We've grown our broking network from in 2013 at 140 to now over 1,100 finance brokers across Australia promoting our range of products. We have representation in every state and territory across the country. They refer loans to Finance One, who follow strict lending guidelines, credit analysis processes and due diligence tests to ensure that we are taking on good quality clients. Our lending policies, they promote responsible lending, and our personalised loan management procedures will mitigate the risks associated with borrowers' defaults. We provide finance to clients who genuinely have the capacity to repay. Another unique attribute about our business is our focusing on managing client relationships throughout the term of their loan. 21 years we've been doing this for, and this is this is how we've been able to build rapport with the team. Our team work closely with each client to help them through the repayment process and to keep them on top of managing their obligations. We see this as an integral part of our responsibility to clients who have specifically come to us to either establish or re-establish their credit rating. Like any lender though, there are times when people can experience difficulties for whatever reason. We have the processes in place for these occasions to recoup the funds like any responsible financier. It's how we work with and engage our clients that is ultimately how we keep them on track. We have a flexibility there. The opportunity and success of our automotive credit products has paved the way for Investor Central to offer a higher yielding return to our investors. Quinn touched on the financials before, but it gives me great pleasure to announce and go through some of the highlights. Our earned income this year was up 47% from $15.5 million to $22.9 million. And our net profit before tax was up 39% from $2.75 million to $3.84 million. Total equity has grown also 45% from $5.8 million to $8.5 million. 100% of our profits since inception have been reinvested back into the business to build equity in a stronger company. Through the prospectus, there's a covenant that mandates us to do this into the future also. Our loan book value, carrying value, increased 49% from $59 million to over $88 million. And we have paid over $10.4 million in interest to our investors for the last financial year that's gone. Our cash holdings have also grown to meet the demand and expectations of our broker network to $15.5 million. We ensure we have adequate cash on hand to fund our operations. And the gap continues to grow between the size of the loan book and the funds borrowed from investors through the reinvestment of profits on a monthly basis. Like any lender, risk management is a vital part of our business, and we manage this very carefully. As Finance One's loan book expands and matures in our market, we're budgeting on medium write-off levels of between 11 and 14% for not only our provision for doubtful debts and our write-offs. With the changes in the recent economy, we did expect an increase this year, and we budgeted on, and we ended up having a write-off for our combined provision for doubtful debts and write-off of 11.23%. That was just slightly down from 11.32% the previous year. Now Fiona, that's here, heads up our collections team, and thank you very much, because it was a marvellous effort on their part. I am also pleased to announce that our write-off for actual physical bad debts for last financial year was 5.3%, or just 1.4% of the entire loan book. Managing risk has always been a priority for Finance One, and our loan account managers continue to stay in regular contact with our clients. This is a prudent measure of us growing our loan book on a national level. The next slide is our write-off tolerance. This helps demonstrate some of the strengths of the business model. So if we looked at what we're owed over the next 5 years in principal and interest repayments from our clients is over $134 million. What we owed back to our investors as at the 30th of June after cash holdings are returned is just over $74 million. That's a difference of over $60 million from what we're owed by our clients to what we owed our investors. To demonstrate the strengths of the business model, if we take off our historical provision for doubtful debts of 2.5%, this still leaves us with a balance of $130 million. But let's try to stress test the business model. If we took a 7% write-off, we'd still be left with more than $124 million. Or if we extrapolate that write-off to 25%, we're still owed more than $100 million. The write-off tolerance equation is designed to help demonstrate the strengths of the business model. Ladies and gentlemen, we continue to build a substantial margin of safety. Investor Central has taken a measured approach to growth and raised capital progressively to match the demands for our expanding business and broker network for Finance One. We are proud to provide complete transparency to our investors to demonstrate how these strong returns are earned. Finance One currently lends on average approximately $5 million per month. and we've increased our infrastructure to have the capacity to lend up to $7 million per month. It's this gap that represents the opportunity for our investors in the future to expand their existing investment with us, or for new investors to enjoy the return that we offer. The marketplace demand for our product is strong, and our performance in this industry sector is robust. Thank you all for joining me here today. It gives me great pleasure to be with you. And I want to thank our Finance One team for their dedication and resolve in growing our business in a national market. Absolutely wonderful. If I could also mark a milestone. Jason Ryan, who is our lending manager, along with being a director of the company, clicked over 10 years this year, just recently. He's a remarkable individual and has been there from day dot in the trenches, helped forge the team, and I am extremely proud to be associated with him. So thank you, Jason. And thank you to our investors who help with our growth on a national level. Referrals are an important part of our expansion. I welcome you to refer anybody whom you feel may be interested in an investment with our company. I'm also happy to answer any questions which you may have. You can ask them now, or you're more than welcome to come and ask Quinn or myself later. Does anybody have any questions? Now, in Sydney, in Melbourne, I have to stand up here for another 20 minutes because everybody's got questions, but come and ask me anything later on. You're welcome to stick around for dessert, and tea and coffee is going to be served. I realise some of you may have to get back to work, but I thank you for coming along and taking the time to attend today's event. Cheers.